Hey guys, how are you doing? Just came back from my work and having some tea, and I thought of doing a video. Actually, I was thinking of doing it for quite a while, but today I thought it's a good day, and I'll share my thoughts with you. So I want to share with you my experience when I was a new investor, just starting out, and I made some mistakes. People are smart when they can learn from their mistakes, but the people who can learn from others' mistakes, they're even smarter. So, and these are just my personal experiences. They may not apply to everybody, but I think they're very useful. So, very first step, I, before you buy any stock, I think you should know the basic of accounting, how to analyze income statement, balance sheet, cash flows. I think all those are very important to know about the financial of the company. You should get acquainted with a lot of terms like price to sales ratio, price to earning ratio, market cap, outstanding shares. I think those are, you should know that because there are companies who are very, very good companies, but you may not want to buy them because their valuation may be too high. So the very first step, I think, learning some basic accounting skills so that you can analyze balance sheet, income statement. That's number one. The second is avoid lazy investing. What I mean by lazy investing is just do not follow the crowd because there are many hyped stocks and there's a fear of missing out, and you should not do that when you're starting out. You should only invest in good companies with good business model and who have sustainable competitive advantage. Many times investor just see the stock going up and follow, and they're expensive, and in the end the risks are too high. So when you buy into a stock, there's a company behind a stock, and you should try to analyze the business of the company. I think that's very important. I didn't do that, and I invested. My first stock was a cybersecurity company, penny stock. I lost a lot of money, so I didn't know anything A, B, C, D of cybersecurity. So you can learn it, but unless you don't know it, if you don't know about the company, try to learn about it, then buy it. Number three, do not invest in penny stocks when you're starting out. You should not invest in penny stocks anyway, because these companies are very volatile, and many of these companies' management is not very transparent. They are not. And these stocks can go up and down, very volatile swings, and it's not good for you as a new investor. When my first stock was a penny stock, and I lost a lot of money. My thinking was, okay, it's easy for $1 stock to go to two, then a $60 stock to go to 120. But that was not true. So don't invest in penny stocks. Maybe in the beginning you can start with a small amount, investing small amount, $1,000, $2,000 in good companies, and try to learn how market behaves, and get some experience before putting a lot of money into the stocks. From my experience, it's not a get rich soon scheme. I think you have to be very patient. I learned it, but I have to pay some tuition to the stock market. Do not own one single stock or two stocks. It's very risky. You never know what can go wrong. I believe you should target 15 to 20 different companies, very well diversified portfolio, and good companies. One stock, all money in one stock, in penny stock. I had no experience and I learned it hard way. But over the years, I got some experience. I'm still learning, but I think it's a process. And my last point is number 5: build a community around you. Be around people who are interested in stocks and even they who are better than you, so you can learn from them. Uh, Spend a lot of time reading. There are a lot of magazines on internet. There are a lot of websites. You can read their articles. I think I like the Morning Star. I think it's very good. Their recommendations are good, and try to be aware of what's going on around you, what's happening in the industries, different industries. I think that really helps you in investing decisions. And if you don't want to buy individual stocks, I think they're very well managed professional um, index funds, SP 500 index funds, or many ETFs who are professionally managed. You can just put money into them for a small fee, and then you don't have to worry about anything. So that's another way. But if you do want to invest in individual stocks, then all the 5 points I mentioned, I think you should definitely take care of them. But that's my totally personal experience. I'm pretty sure different people have different experience, but that's totally my perspective. If you found my video useful, please do subscribe to my channel so that you can get my future videos first. Happy investing. Bye bye.